Welcome to the Investing Podcast presented by Tusk Media. This is Outsider Trading, an audio and video deep dive into the people, places, and things that we find most interesting in the market.
Hey everybody, welcome back to the Investing Podcast. It is Bank Week. We're taking a look at bank stocks. In particular, we've looked at JP Morgan, we've looked at Wells Fargo. This is the video on Citigroup, previewing earnings which come out April 13th. I'm Andrew Hall. Joining me, our senior equity analyst here at Narwhal Capital Management and Tusk Media, Ben Nye. How are you?
I'm doing well. How are you?
Doing good, doing good. We're kind of flying through these real quick. If you haven't watched our macro video, check it out. I think we've got a link in the article and a link below. We hit on a number of things: interest rate hikes, a strong economic environment, at least in our opinion, some good data that we're starting to see, and really kind of a disparity between what bank stocks and financial stocks as a whole have done versus the market. And that's kind of one of the things that I think is a little bit surprising. The market's up 5 or 6% year to date, and after what we saw in November and December and what we know about rate hikes and what we're projecting with that, I think we would both assume that bank stocks have kind of taken off and run.
Yeah.
But that's just not really the case, and one of the companies that's a great example of that is actually Citigroup. Looking at that again, earnings coming out on April 13th. Want to jump in and kind of do some analysis on things that are impacting the stock, and it's a little bit different than maybe what we said about JP Morgan or Wells Fargo. But jumping in, want to talk about CCAR. Want to lead there with kind of the comprehensive capital analysis and review for the uninitiated or those who just don't like abbreviations. Jump in there and talk about how that really is going to matter for Citigroup in particular, and how that's really going to be maybe even more important than earnings.
Right. So Citigroup has kind of been in the hot seat with regulators for a while. And then Michael Corbat came in as CEO. So Corbat, you're not familiar with his history, he was the president of Citi Holdings. And Citi Holdings was the bad bank. That's where they put in all the bad assets, the stuff that they thought would default, the stuff that they kept losing money on. So Citigroup was split into Citi Holdings and then the remaining, the good bank. And so Corbat led the Citi Holdings business and then transitioned to CEO of the entire company. And his focus has just been on ongoing destroy Citi Holdings, continue to make it a smaller and smaller piece of the pie, and hope that it breaks even. It's not going to make money, but just hope that it doesn't continue to hemorrhage money. So Corbat has a philosophy of essentially just try to appease regulators. So he doesn't want to get too far out on a limb. He doesn't want to commit to a large dividend. To the extent that he does return capital to shareholders, it's not going to be that big fat dividend that a lot of investors like to see. It's going to be more weighted to share repurchases because you have more flexibility there. It's a lot tougher to cut a dividend than to just buy a little less stock back. So I think that will probably continue. But if the regulators ease up on him, and if he's able to convince them that no, we are taking risk as our number one priority, and we're committing to this dividend, yes, but we are still very much focused on risk, I think that would help the stock. Unfortunately, we're probably not going to get the CCAR results until after these guys report. It'll probably be another week, 2, maybe 3 weeks, depending on how quickly the Fed works. That said, it could be another catalyst for them if they start to see a more robust economic environment.
And one of the things we've kind of kept an eye on with Citigroup is guidance, and we're going to touch on that a little bit more. But I think that's one of the read-throughs of things we're really going to be paying a lot of attention to is not so much earnings, just on a flat-out sense. Earnings. We've got the expectation number consensus is about $1.24. You're hearing the whisper, so to speak, at $1.30. That's what some people are expecting. I think what's going to be even more important for them is what they say about guidance on things, because you have a lot of issues that are really kind of important to keep an eye on. We touched on interest rates earlier, and we'll come back to those, but also the tax rate, because they're actually in a unique position in which a lowered corporate tax rate could actually hurt what Citi's eligible and able to do. Explain that a little bit, Ben.
Yeah, it's great you brought that up, because it's tempting to look at Citigroup versus a JP Morgan or something, and say, well, JP Morgan trades at a significant premium to book, and here's Citigroup that trades at a discount to tangible book value. But what happens is in Citigroup, on Citigroup's balance sheet, they have $16.80 a share in deferred tax assets. Now, what happens if they have to use a lower tax rate assumption? Well, they have to write down those assets. What happens if they write down the assets? Then the equity gets written down a little bit, and then you can't deploy as much capital because the regulators say you can only deploy X percent of your capital. So that could actually be a detriment to Citigroup in the near term. Obviously, having a lower tax rate will be good, yeah. But in the near term, it could force them to deploy less capital than they would like.
And that's kind of one of the things we want to keep an eye on. The other thing I think, as it relates to guidance is kind of this disparity between, what they were expecting interest rate wise and what we're seeing. And I think also what kind of the consensus, not only on the street, but also just among investors has been. They came out and basically said, we don't expect a rate hike in 17.
Yeah.
We expect one in 2018. Kind of staggering. I mean, some of the only people that have, come out and actually said that. So it's going to be interesting to see, one, how they adapt to where we are, but also if they adapt what their projection is for the remaining, period of 2017 and 2018, and see how that kind of prices into their guidance. What are you looking for there?
Yeah, that was very interesting to me because I think a lot of people were extremely disappointed with what they perceived as Citigroup continuing to push out these targets. So they had a goal of an efficiency ratio of 57 to 58, return on tangible common equity, X deferred tax assets of 10%, going up to 14% over time. But then they said, we're going to push out some of that 14% target return because we don't see interest rates in 2017, which was just a indictment on their view of where the Fed was going to go with rate hikes. I think we've already had one now. My guess is they're probably going to say, we think the Fed is done for 17, we still expect one in 2018. But even that is dramatically lower than what the estimate on the street is, or even the Fed's estimate, which projects 2 more rate hikes in 2017 alone. So I think Citi was conservative with their guidance and has given themselves room to be on the upside.
And it kind of brings up two things that we look at a lot, when we're analyzing companies. One is that guidance. There's something to be said for being conservative and not getting hopes too high. There's also something to be said for almost, kind of sandbagging.
Right.
And in some regards, they have that. The other thing we really look at is managements that have, varying views of whether it's a specific trend or the economy as a whole. And they've certainly gone out on a limb on that. The problem there becomes that, they've kind of painted themselves in the corner because to go from, hey, we don't expect anything, to come out and say, oh, well, now we expect three rate hikes, implies that over the last 3 months, the economy has outperformed their expectations wildly, which then kind of begs the question, well, what did they think was going to happen to the economy? Because I think we would agree that we've seen strong economic data. I don't think we're blown away or shocked by it. It's kind of trended over the last little while in that same direction. So they've kind of painted themselves in the corner where they've got to some degree kind of stick to their guns.
Yeah.
And it could create a little bit of a problem just in terms of, hey, why are you still on a different page than other people? And so that's, I think, going to be one of the things that's interesting when they give guidance, when they give expectations on what they're looking for. Ben, any other thoughts on Citi?
Yeah, I just wanted to touch one more piece of conservatism from last quarter is that they don't expect Citi Holdings to be profitable in 2017. This is the bad bank that we were talking about before. It generated $600 million in income in 2016, and you'd think that as that becomes smaller and it becomes they work toward profitability in that business, that that it's unlikely that it would reverse course.
Right.
So I think that's a point of conservatism as well. Overall, I'm optimistic about Citi. I think you look at the United States, but you also look globally about where Citi is. I mean, Europe has outperformed expectations. I think China's improved. And so you look at the global economy, and I think that there's room for optimism in Citigroup's results.
Yeah, and that's one thing I would plug. If you go back to our YouTube archives and search Citigroup or ticker C, we actually did a video, I would think it was maybe in October or November, kind of about the breadth of Citi. and kind of this idea of almost being all things to all people, and
Right.
how spread out they are, and kind of the importance that puts on really operational excellence. And we mentioned operational excellence when we talked about JP Morgan and how they're kind of, almost this capstone bank, so to speak, and kind of a figurehead in Jamie Dimon. But I think with Citigroup, maybe they are not recognized that same way, but the way that they can really become a giant is through that.
Right.
And to some degree, I mean, maybe that lends itself to kind of conservative guidance,
Yeah.
wanting to say, hey, we're more focused on making sure we do our things right.
Right.
We're not going to put a huge premium on the economy. Not only are we not putting a huge premium on it, we're expecting things on the lower side. So that might be something to kind of keep an eye on. But check out that video. It's in our YouTube archive. While you're there, hit subscribe. Also, if you're on Seeking Alpha, hit subscribe. We've got, again, videos on JP Morgan. This was Citi. Also got Wells Fargo, and a macro look at kind of the financial sector and banking stocks in general. Y'all have a great day. We will talk with you soon.
Tusk Media is a subsidiary of Narwhal Capital Management. Ratings and reviews of Tusk Media content are not to be construed as endorsements of opinions, analysis, or services offered by Tusk or its parent company. The opinions and predictions shared here are professional beliefs at the time of publication. We are not under duress from any of the corporate entities mentioned. This is not a solicitation to take any particular action. Although we are investment advisors, this information should not be considered investment, legal, or tax advice. We strive to be as impartial, insightful, and accurate as possible. We base our opinions, analysis, and calculations on information we believe to be reliable, but we cannot guarantee its accuracy. We can, however, guarantee that our opinions will sometimes be flat out wrong due to a variety of factors. Employees and clients of Narwhal Capital Management may or may not hold positions in the securities detailed and may or may not hold these positions in the future. A full list of all securities purchased, sold, or held during the 12 months preceding the date of this publication can be provided upon request. Unless otherwise noted, all data accessed via MarketWatch or the Bloomberg terminal. Past performance does not guarantee future results. A copy of Narwhal's Form ADV is available at the SEC's website, www.advisorinfo.sec.gov, or from Narwhal upon written request.